Now, the Reserve Bank of India has announced this 2.1 lakh crore rupee dividend to be disbursed to the government, and this is for FY24. It's the highest that the RBI has ever given out to a government, and this is for FY23. It had come in at 87,000 crore rupees, so you see the kind of hike that we are seeing in the dividend payout. Let's discuss the impact and the implications of this. For this discussion, Swaminathan Aiyer is joining us. But let's first go across to my colleague Ankur. He's got all the details about this big check, this dividend payout by the RBI to the government. Ankur.
Yes, highest ever payout check to government by Reserve Bank of India with 2.11 lakh crore for FY24. Remember, if you compare with last year, it is 141% higher because in FY23, the total payout was 87,416 crore. Now, apart from that, the Board of Reserve Bank of India has also decided to keep contingency risk buffer at the extreme end of 6.5%. This was 6% last year, and after the transfer which will be made to government, of course, the anticipation is that the government will have more headroom for spending. Apart from that, you would remember in the interim budget, the target which was given for FY25 was around a lakh crore. So expectation is that when the budget is presented once again in the month of July, this number may go up. Now, as far as the transfer to surplus to government in the past few years, this has been the highest.
Mr. Aiyer, what would you say are the biggest implications of this record jump? It's 140% higher than the amount distributed in FY23. Surely, as a phenomenal jump, it has certain implications. What would you say those are? Because it speaks about an economy. It's also talking about the RBI's ability really to manage funds, isn't it?
All I can say is that it is not clear to me how the RBI has got such a larger surplus to distribute this year than before. 2.1 lakh crore is a phenomenal amount. I think 0.7% of GDP or something like that. If you see that the fiscal deficit target, the glide path of Nirmala Sitharaman was actually a very difficult thing to achieve. She was wanting to go from 5.8 to 4.5 in 2 years, which is really a fantastic squeeze. And I was wondering how she was going to bring it about. And the answer is it is being brought about not on the revenue side, but by getting this non-revenue RBI transfer, which will make it much easier to get down to 5.1% this year. And the target for the consequent year would be 4.5. So all I can say is that what's happening is that she's maybe on the glide path on the fiscal deficit with a bumper dividend like this. But this is non-revenue. Therefore, it means that the revenue deficit continues to be very, very substantial, even if she reaches the fiscal deficit target. And I think this will not be repeatable in subsequent years. If it is not repeatable, then I do not know how she is going to make the transition the subsequent year from 5.1 to 4.5. All I can say is this has made a very big difference to the full budget, which is going to be presented in July.
Perhaps how the government would deploy the kind of bumper input that they're getting from the RBI by way of this payout, in terms of their borrowing, in terms of their spending, how is that going to get affected?
All I can say is that, this makes the budgetary situation easy. The key question is, what are the different elements? What are the different elements of the RBI's balance sheet? Have they made this through trading profits? Have they made this through higher returns on their foreign exchange reserves? Is it because they are marked up to date? The gold reserves have gone up and they are marked to market. It is not very, very clear at this point what has resulted in this rise in the RBI dividend. Once we have greater clarity on that, I think we will be able to find out what are the consequences for different parts of the economy and what are the chances of such a large dividend being repeated the following year.
Right, so I want to ask you about CRB having been increased from 6% last year to now 6.5%. What does that really signify? If you could throw some light on that as well.
It signifies that the RBI has worries. I mean, you may remember that Deputy Governor Acharya resigned on the question of whether or not there is a sufficient buffer. At that time, he was against an increase in dividends because he said, the buffer is not enough. So the RBI is is I think aware that there is a chance of some kind of financial storm in markets, which may require RBI intervention on a much larger scale than hitherto. I think that is what it signifies. It's also sending a signal out to financial markets, saying, look, we have all this money. Don't try to have a speculative run on the rupee. We will be able to stop it. That, I think, is the message.
Just to understand contingency risk buffer over here, because they stopped maintaining, the RBI stopped maintaining the contingency risk buffer at 5.5% of the balance sheet, which the RBI incidentally held throughout the pandemic period or through that turbulent period. And then you raise it, like Sumita is pointing out, to 6 and 6.5%. And still you make more to write out this kind of check. Is that reflective of the RBI's ability to manage funds? Because you did raise questions about how exactly the payout has been as huge as it is.
Yeah, all I can say is that there is a mystery. I mean, I think the market was expecting a dividend of 1 lakh crore or so. How it has gone up to 2.1 remains a mystery. So we will have to unravel that mystery by getting a much closer look at their balance sheet. And that in turn will, I think, decide whether this is repeatable or some one-time off thing that has taken, for instance, like revaluation of gold reserves or something like that. So we have to wait and see what those details are. Only then can we be sure about the consequences.
So you briefly touched upon markets just a short while back. I want to understand from you, how do you see markets reacting to this in the immediate term?
I think market will basically be happy that the fiscal deficit is going to be a very easy to run. That in turn means that spending can be kept up. And if spending can be kept up, especially capex, the markets will be very happy. I think we can look forward, therefore, to more of the same. I mean, I'm assuming the BJP wins and Sitharaman is finance minister. If we can expect more of the same in terms of the budget trend in recent years, when the fiscal deficit has come down, even with government capex going up, I think she may be able to repeat that particular trend this year. And the market will be very happy.
The bond markets, Mr. Aiyer?
Sorry?
The bond markets?
I am less sure about that. I think the bond market actually, if you're talking about the medium term, is going to be more influenced by what the Fed does. I think you may find that if the Fed cuts interest rates, so will the RBI. So that may be more relevant than this dividend. So what will the bond market react? I think the bond markets won't necessarily react to this immediately. They will wait and see what the Fed is going to do.
Right, sir. I want to again go back to the point of the borrowing program of the government, and economists are expecting that to be lower. But how much, by how much will the fiscal deficit go lower? That's the question that's looming large right now, considering the fiscal deficit is still beyond the target of 3%.
The fiscal deficit last year was budgeted at 5.8. I think they've got to 5.7 or so for the final figures. So to get down from there to 5.1 is a big cut. So what it seems to me that we have to see what is happening to the rest of the budgetary figures. The growth rates that we have been getting in the economy has been much higher than estimated. I think when the year began, Anant Nageshwar and CEA talked about 6.5% growth. We've had growth of more than 8% in the first 3 quarters. There were some statistical issues there, so people are not quite sure. But if the fourth is also high, it means that, this is an exceptionally fast growth, much, much faster than was budgeted for or expected by any of the markets. That, I think, should show up in a boom in revenue. If it shows up a boom in revenue, then Sitaraman is going to have much more scope for increasing spending while borrowing less from the markets. I think we can be optimistic on that front. So apart from the dividend from the RBI, I think the exceptionally fast growth in this last financial year is going to show up in improved projections for revenue for the current year. And that will mean less borrowing from the markets.
All right. Thank you very much, sir, for joining us this evening with your perspective on what the RBI payout, dividend payout really means for policy and, of course, the markets. Of course, all eyes now on the next government formation and, of course, on the budget and what kind of spending the government really unleashes, what kind of policy moves it takes and expenditures it incurs. On that note, thank you very much, sir, once again for joining us this evening.